Today's podcast is brought to you courtesy of our friends at Tuttle Capital, who not only create defiant ETFs for the market, but help investors choose better, navigate smarter, and rest easier. Tuttle Capital, the antidote to Wall Street.
All right, joining me is both Leah Wald and Max Kaplan of Sol Strategies. So Leah is CEO there, Max is Chief Technology Officer, and Sol Strategies was the first publicly traded company to combine a Solana treasury with a revenue-generating validator business, which if you don't know what that means, don't worry. We will get into the details of that. But I will tell you firsthand, Leah is someone with deep expertise, certainly on the traditional asset management side, which is where we actually first met, but also on the alternative asset management side and in disruptive technologies, which obviously includes crypto. And then Max was actually one of the first engineers and early employees at Kraken. And then he went on to found Orangefin Ventures, one of Solana's leading validators, which was eventually acquired by Sol Strategies. But Leah, Max, it is so great to have you on the podcast. Thank you for joining me.
Thanks for having us, Nate.
Thanks for having us.
All right. So, Leah, it is so funny because we did meet on the TradFi side talking crypto ETFs when you were CEO of Valkyrie Investments, which I guess that's probably more of a hybrid between TradFi and DeFi. But nevertheless, I would say you're like another one of these growing number of ETF people who has gone full crypto. Right? You had some TradFi in you. Now it seems like it's all DeFi, which, by the way, to be fair, some would say I'm quickly barreling down that path as well. But for people unfamiliar, just tell us a little bit more about your journey over the past couple of years from Valkyrie to Sol Strategies.
Yeah, and I'll make fun of us for a second. I think last time I saw you was at ETF Exchange. So we've we've changed from suits into, t-shirts for sure at the different conferences we go to. No, thank you again so much for having us. I'd say, when did my career become full-time, crazy, crypto? I was a partner at Lucid. So Lucid was one of the first Bitcoin asset managers back in 2016. So specialized in investing in GBTC at the time, which we were all following for our discretionary accounts. After that, as mentioned, co-founded and ran Valkyrie Investments. And we launched some of the first crypto ETFs in the US, but we had a plethora of funds. So we had on-chain DeFi hedge funds and SMA strategies for RAs and grantor trusts and lots of things in between. So really learned, not only public market structured products, but also general crypto funds and had a stake internal to them and, all that fun and that jazz. And then after that, from where we are today, I joined what was Cypherpunk Holdings to Sol Strategies. We made that pivot back last July. I've been on the board since 2021, so very familiar with this company. And Cypherpunk Holdings was actually the original MicroStrategy. So it was the first public company to put Bitcoin on the balance sheet, make Bitcoin investments back in 2018 on the CSE. So when we saw that there was this opportunity for Solana last year, there was no public companies, there was no ETF out, this is July. We were like, okay, this is great, writing on the wall right now. And we did a complete strategy and material name change. And so in September, we became Sol Strategies. To your point, we decided that it was more powerful, not just to be a DAT, but to run a company as well. And we've been off to the races ever since. So it's great to be here.
I love that. And Max, I briefly mentioned your background at the top. Just tell us a little bit more about yourself.
Yeah, absolutely. Thanks for having me again. So my name is Max. I'm the CTO here at Sol Strategies. And, a little bit about me, I fell deep down the crypto rabbit hole in 2017. I, just discovered Bitcoin and, I actually invested before, but I had never really I never really dove deep down the rabbit hole until late 2007 or early 2017, excuse me. And I started building some open source packages and libraries, things like that. Made some like very early but small contributions to like Bitcoin Core and Lightning and things like that. But then around then, this really small company at the time called Kraken reached out to me, and funny enough, believe it or not, it was a DM on Reddit. I never would have thought that I would be able to say I got a job off Reddit. Never applied, but I had like crypto was so small back then that like I had like made a open source package on Reddit, and somehow it made it to the top. And it was like the top ranked thing on our Bitcoin or our Ethereum. I can't remember which one. Kraken reached out, joined, was one of the first 10 engineers there. I think it was the first 10 or 15, and we were a really small company trying to figure out this whole crypto thing was going to take off. And I ended up working there for 6 years. I led DevOps and data engineering. The way I describe my job to friends who weren't technical is if Kraken went down, it was my fault. And, certainly we had times like that just because in crypto, what I always said to my team was, Amazon can always predict that their traffic is going to 10x every Christmas. In crypto, you can't, right? It was like one day, like Elon Musk would tweet about Dogecoin, right? And then we would just see a 10x in traffic immediately. And, I worked there 6 years. And what I found was, I joined Kraken because I was really interested in crypto. But what I found at Kraken was I actually was very interested in trading. And, at the time in early 2017, the idea of trading on chain it just seemed so far-fetched. Bitcoin only processed 7 transactions per second. And, listen, I love Bitcoin. I think it's a great store of value. Excuse me. But with Solana, I made my first trade on a Solana DEX, and that really changed everything for me. And, I was like, damn, like this is really good enough. Like this really compares to Kraken's retail exchange. So retail apps. So then I, really dove deep in Solana, started a validator called Orangefin. That was acquired by Sol Strategies, and here I am.
I love it. Such a great backstory. As you went through that, it just reminded me of the saying that a year in crypto is like 10 years in TradFi. So would you agree with that? Like, do you feel like you've been involved in this for 80 years now?
Yeah, it's changed so much, but certainly would agree. Definitely.
All right, so we're obviously going to focus on Sol Strategies in Solana, but Leah, you have to bear with me. I first have to ask you just how you're viewing everything that's been happening in crypto ETFs. Like, do you miss that at all, or are you happy to be out of the ETF terror dome? Because there's been a lot going on there.
No, that's exactly right. I mean, I'm actually thrilled to be out of the ETF terror dome. Don't get me wrong, the ETFs brought crucial legitimacy, right? And it was so exciting. But building ETFs is ultimately packaging other people's assets, whereas I see what we're doing now is building that infrastructure. And I'd much rather own the toll road than just hold the tokens that drive there. But no, I think that we're seeing, and what matters most if we step back is just a completely revolution of the regulatory environment in DC. So before we talk about what we're seeing with the proliferation of filings across the spectrum from Trump coin to Bonk to Sol to literally everything you can think about from established issuers that already have traded products. So a traditional background in that, and even Cheeto Sol filing. So even a liquid staking tokens, really down the rabbit hole of DeFi, you're looking at just a completely different DC. You wouldn't even see those filings before this year. You would never waste the money on legal to ever do that. Fund counsel is expensive. So why would you do that? But there's a belief that all of these will also be approved. And so when we started Valkyrie, our first spot Bitcoin application was actually January 2021. And we worked on our first ETF early 2020. So I remember, as you can imagine, waiting so many years on the SEC and just simply not having the conversations there. And, they're across the spectrum. Anyone, especially working in asset management, we were debanked, and we were running public market funds. We were boring. We were a boring ETF issuer, yet we got debanked. Everybody was dealt all these blows, especially after FTX in 2022. So everyone felt like we are just so far, stepping backwards. And if you go to the SEC, that the door is going to shut behind you and you're going to end up in an orange jumpsuit on your way out. And now it's just couldn't be more different. If you look at the meeting notes of who the SEC and who Chairman Atkins is taking meetings with, it's across the spectrum. It's these large crypto native VCs like Multicoin Capital or LSTs, very liquid staking token companies like Cheeto. I mean, truly, incredible. It's not just finally having that first meeting with the SEC where they invite Brian Brooks. Kudos to Brian Brooks, but it's really down the rabbit hole. You have the Genius Act, you have just plenty of clarity finally coming out of DC. And whereas maybe cypherpunks, maybe Max and I could include ourselves there back in the day, wouldn't want DC clarity, all of us in the industry, and especially with the intersection of traditional finance, has just been waiting for this day where the SEC would actually pick up the phone, provide guidance, and none of us would be scared about that phone call. And you're just seeing it across all agencies. CFTC has always been more promotional, but very much so. And obviously, I'd be remiss not to say the White House as well, more than anyone else, with the Bitcoin Treasury Reserve. I mean, it's a wild environment. So to your question about ETFs, you are seeing from the Solana public, Solana world, you have a very successful stake SOL ETF under Rex shares. It's a very different product, 40 Act product. So, as you know, it was very innovative that Rex shares under Greg King was able to get that approved, but it's been immensely successful. We're waiting for the day that stake SOL ETFs will be approved for the rest of the issuers under a different product wrapper. And no matter what, the big news of this year was in-kind creations and redemptions, which is just massive. I mean, that's what we were just dying for, trying to explain, and also trying to explain the tax issues with cash creates and redemptions. So different environment, all stemming from DC. And I think that the future is just so bright.
Are you surprised at just how quick the regulatory environment shifted? Because as you were alluding to when you were at Valkyrie, you knew firsthand how difficult it was attempting to bring some of these products to market, some of these crypto products to market. And now here we are, probably in the next couple of months, we're going to have generic listing standards for crypto ETFs. It's going to be much easier to bring all sorts of crypto related ETFs to market. Are you surprised at how fast things have shifted?
I never would have expected this. I think none of us would have. So 1000%. I mean, it couldn't be more night and day from the regime under Chairman Gensler. And again, as mentioned, just this fear of even working with the SEC. And unfortunately, when we all started trading in January 1st, bought Bitcoin ETFs, he didn't acknowledge it on day of trading on CNBC. He actually talked about how it's still terrorist money. So it was anti-support in so many ways and was very difficult. And then now under this administration, under the leadership of Chairman Atkins and their crypto task force, it's just a different world. And I think that it's incredible. And I think that also for this audience, I'd be remiss not to say that you can now put it in your 401ks. And that's a 7 trillion addressable market. So talk about floodgates, having the opportunity to open. I mean, it's just incredible. I never would have imagined this. Would you, Nate?
No, not the speed with which everything has happened. So I certainly envision this longer term. I just thought it might take us much longer to get there. So it's been great to see. And I've said this for years, Leah, I've just always viewed ETFs as a bridge, or crypto ETFs as a bridge between TradFi and DeFi. It's a way to get people exposure to the space, get interested in the space, and that'll start walking them down the path towards DeFi, which is ultimately where I think all three of us believe everything is heading. And that's probably a good transition point. I don't want to put Max to sleep here talking about ETFs, because you and I, Leah, could talk ETFs for the next hour. Let's get into Sol Strategies and Solana itself. And I guess first, for people unfamiliar, can you just explain what Sol Strategies does? I mentioned the basics at the top, but what's the business model here?
Yeah. So Sol Strategies is a publicly traded digital asset treasury company that's laser focused on the Solana ecosystem. But the difference is that we're not just holding Sol, We're actually one of the top 20 validator operators on the network with over 3.6 million SOL. That's over $1 billion notional delegated to our infrastructure. So we generate real operational revenue from running those validators while also holding our significant SOL treasury. So we call that our DAT++, the plus being an actual operating business. And that's how we've been off to the races.
And Max, I know this is an extremely basic question, but on this podcast, I don't like to assume that people know everything. And I want to make sure we're always starting from first principles. What is a validator? Just explain that at a high level. What does that mean?
Yeah, great question. So, one of the unique things about these networks is that there is no centralized party that, runs the network itself. And let me break that down a little bit. Let me start at the highest level possible. Let's just take a traditional exchange where you go and you swipe your credit card at, or your debit card at, any traditional store. What happens is you swipe your debit card, maybe you're buying, I don't know, a bottle of water, right? You swipe your debit card and then the bank, it will take money out of your bank account. That is how the traditional system works today. It's very easy in the sense that, your balance only gets updated at the bank level. What's unique about these blockchains is that there is no central party. The way it works is that a group of validators come together to actually run the network itself. And all these different validators are going and processing the transactions. So to tie back to that analogy, what ends up happening, with the bottle of water, when you swipe your debit card, is what ends up happening is every validator on the network sees that, Leah is buying a bottle of water. Every validator is going and making sure that Leah has enough funds to actually buy that bottle of water. In many cases, there are people that are malicious and try to submit transactions, where, Leah might have no money in her wallet, but she might try and buy in this example a bottle of water. Validators would see that, they would say nope, this is a bad transaction. They all reject it. But the most importantly, I think, has ties to Sol strategies, is that validators, they make revenue based upon all the transactions, right? So anytime anyone is submitting a transaction, validators get what's known as a fee. And validators, that's how validator companies, staking companies, whatever, really make money, is off these fees. That transactions, that's one of the ways, right? But off the transaction fees that, everyone else on the network is using. So with all these advanced use cases that maybe we'll have time to talk about, trading, things like that, the more economic activity, the more transactions that are happening on chain, the more that validators will benefit in companies like ours.
And did I see correctly, just poking around on your website, that there are over 7,000 wallets staking with Sol Strategies validators right now? Is that correct?
That is correct. It's a metric we're very proud of. It's a metric. It is a combination of both retail and institutional. On the retail front, we've done a lot. We have a mobile app out there. We made some great acquisitions, brought on some great people. Michael, our CSO, created Lane, which is one of the first validators out there. We have a mobile app for Origin, which is really the first dedicated mobile app to Solana staking. And then on the institutional front, we have entities as big as ARK, which we just announced that's staking with us. We're their exclusive staking provider. And then also other public companies that, we've announced, Neptune, Digital X. And it's really a combination of, I don't want to get too low level, but, our model really is that we want to operate the best possible product at the lowest cost. And, that's our model, right? Is really just, giving stakers the best possible yield and keeping our costs low so that we can go and do that. On the institutional front, we have all of our fancy certifications, SOC 2, ISO 2701. Those are just a lot of certifications that, institutions need. And then on the retail side, we just offer great return.
I want to go ahead, Leah.
Yeah, just to follow it up, because I have a lizard brain, Max has made me memorize one statement about what is a validator, and I know how to regurgitate it. And how I explain it, my nice regurgitation, is a validator is a node that secures the network, so similar to a Bitcoin miner, and that's by validating the transactions and producing the blocks, and then earning revenue in the form of SOL through those staking rewards. So exactly what Max just talked about, but he's made me memorize this many times.
I might use that. That's a good way just to package it up, very nice and tidy. I was just going to say, I do want to get more into the investment case behind Solana itself, but before I forget, Leah, I wanted to ask you specifically about the fact that you are what I would call a Solana treasury companies. And as you know, this entire topic of digital asset treasury companies, this is a hot topic right now, right? There's a lot of debate, there's a lot of discussion around these. I feel like, at least from my perspective, some investors believe there's real value creation going on here. But you have another camp of investors that think this is all just financial engineering, right? That it's going to end very poorly at some point. And so, just at a high level, how are you viewing all of this? And maybe how do you view Sol Strategy's approach to accumulating Solana compared to some of the other DATs that are out there?
Yeah, it's the right question. You have a complete proliferation of DATs. I read a Galaxy report recently that said that there's over 293 DATs in the world right now, which is just absolutely bonkers and remarkable, and provides the necessity that all of us now do our own research. When there was effectively three, maybe MicroStrategy, MetaPlanet, and Sol Strategies last year, it was very different. But now you just have so many that have different backers, different, to your point, financial engineering structures, lockups on that one, different fast money. At this point, it's very much fast money. So we actually see things with a ranking system. Tier one just being Bitcoin and hoping for price appreciation, right? Hope it goes up. With good financial engineering in the background that Michael Saylor and MetaPlanet and a few others have done a great job on. We then see the next tier being, holding the asset, but staking it. So then you have a great example with Tom Lee. He's doing an excellent job on that front. And that does provide those reoccurring revenues that assist with the debt holders. Okay. Then we see ourselves in that DAT++, the third tier category, where you are holding the asset, you're staking the asset, and then you're earning revenues from a business, an operating business that also accrues and compounds that asset through the business and by that recurring revenue. So in that regard, we see us as much more hedged for the bear market that one day will come. No and ifs or buts, because regardless of price volatility, you are still compounding SOL with actual revenues. So that's how we're seeing the landscape. But I'll admit there's many, many more that are coming out. We're aware of at least 15 that will be coming out very soon in short order. And it's a very different game of the ones that are coming out right now, with investors who are absolutely investing for the parabolic rise and not long-term investors. So not aligned for the success of the company. But then there's some that are golden lights who I think will be very successful in the long term as well. So I think that you're just seeing a completely saturated market that's already started. It's going to get more saturated, and not all are created equal, but that's how we view the ranking system.
I think that's a really good way to describe what's happening there. And from my perspective, I'm not against DATs in any way, shape, or form. I think what I have some concerns around are just, do investors understand all of the risks involved based on the different types of DATs that are out there that you just walked through? There's very different risk profiles depending upon what's going on underneath the hood. And to your point with Sol Strategies, the fact that you have a strong cash flow business model, which can help withstand, say, a huge bear market in Solana, that makes a difference. But that's just an example of something that I think investors really need to consider and walk through and understand, what kind of debt's on the balance sheet, what kind of cash is on the balance sheet, what's the business model, et cetera, et cetera. Let me ask you this, and I can't help myself not to go back to ETFs. I promise this will be the last ETF question, so Max doesn't, jump through and strangle me because I'm focusing on ETFs here. But as spot Solana ETFs become readily available, which, as I alluded to, could be very soon, and let's assume that those include staking as well, does that diminish the value proposition of Solana-focused DATs at all? Because I've said one of the reasons DATs have worked is basically regulatory arbitrage, right? Investors And especially institutional investors, they haven't had other options to get exposure. And so DATs have served a purpose. So what do you think about that?
Yeah, no, that's also the right question. Let's bring it back to ETF world of actually why Bill or, pivoted the company accordingly is at Valkyrie, actually, our Bitcoin miners ETF was the best performing non-levered ETF in the United States in 2023. It was a complete surprise to us because it started with very little AUM and we were a 7-person team at that time. So very surprising, but most surprising because ETH came out that year. You had cap weighted, blended. Now it was futures, right? But you had leverage, inverse. You had so many issuers in the market, great issuers that had just a proliferation of different products. So they went into our little miners. We were the only one running a Bitcoin miners ETF at the time, but they also went into the large miners. The flows into Marathon, into CleanSpark, into the larger miners was enormous. And I think way more than any of us expected. And I think to your point, the reason why, at least in 2023, was because it still was a picks and shovels play and you could do more fundamental analysis. And as you're aware, Nate, at that time, an investment advisor who's newer to the market and trying to understand an allocation strategy, they were just trying to get comfortable with Bitcoin, right? You were out there trying to explain that like Solana, Grayscale's private or recently OTC listed blank trust, provided yield. And that was even more cool, right? So like you just started the education with boots on the ground and we're just trying to get investors comfortable after 2022's big black, eye. So I think that that's really the reason that you saw this, a lot of institutional and older money as investing in the miners because that was their way of investing that they felt comfortable with because they could do fundamental analysis and say to their clients, yes, we're invested and I'm more comfortable here, right? So why does that bring us to here? So, I think when the ETFs come out, especially when you see larger names like if we see BlackRock in the future, obviously they haven't filed one yet, but you have great names like VanEck, et cetera. So I think when those come out, they're going to be a great product for investors who have seen a great price appreciation and investment in the Bitcoin ETFs, having invested in ETH and are more comfortable. I think it's going to take a little bit longer still for them to get on the platforms. As you're aware, IBIT still isn't on a lot of platforms and Vanguard still says no. So at the same time, I think, and I hope that they look at companies like ours with a revenue business and say, okay, I can understand that and I'm comfortable. And now I have a product suite. So that's what I'm hoping for. But I do think demand will come into the Solana ETFs. You've seen it with rec shares, and that's only a good thing. It's a rising tide if it's a good product.
Max, I want to ask you specifically about the investment case for Solana, but anything that you would add here to this discussion around DATs?
No, I think Leah nailed it perfectly. I think the only thing is really just this is that, like a lot of DATs today, they really look at the asset in terms of appreciating. What we really look at is the network, which, I think is like kind of a good segue into your next question. But, we believe in the Solana network as well. And we believe that there's going to be, better assets that come to Solana. And as a result, we are going to make more revenue off of that. We think the Solana network is going to flourish. And we think that's going to benefit not only us, but everyone, right? That's in the Solana ecosystem. And to answer your question about, the investment case for Solana, the way I really look at things is that in one camp, you have Bitcoin, which is a store of value asset, right? And I think Bitcoin does a tremendous job with that. On the other end of the spectrum, I think you have these smart contract platforms, and it's namely Solana, Ethereum, a few others. And, really what I think it's going to come down to is, where the most activity is and where the most users are, right? And if you look at almost every major metric in terms of transactions per second, volume on DEXs, daily active users, monthly transacting users, Solana's pretty much winning in almost all of them, right? There are a few we're a little bit behind on. Most of them are ones where there's a time component to it, such as TVL, for example, total value locked. I don't want to get like too technical, but really, that's one of the inputs there is really how long the network has been around for. And our view is this: our view is that Solana is the best blockchain that's also the easiest to use. It's the fastest. It can support, really advanced use cases that other blockchains can't. It's also very easy to use. And we think that, with things like, real world assets tokenization, things like that, the Solana network is just going to become, bigger and bigger. And, really in general, I think more builders are gonna build on it, and more established issuers are going to, put their assets on chain, because, it's somewhat archaic to think about something like this, that, Nate, you and I, we can talk across the world in real time. Yet if I want to buy a stock on a Saturday at, 5 p.m. just due to some global macro event that takes place, I can't do it. So we think there's real demand, and it's solving a real problem for users, and that is really the investment case that I would say is that it makes trading far more efficient, as well as other use cases for permissionless applications.
Let me ask you this: do you see this landscape as winner take all? And let me add a little bit of color to this, which Leah will probably appreciate, because she knows I have way too much fun out on X tweeting about crypto. But one of the things, Max, that has really stood out to me is just how tribal crypto is, in the sense of you have Bitcoin maxis, you have this XRP army. They're obviously very passionate supporters of Solana in Ethereum, Hedera. I could keep going. Is it winner take all in certain areas? And we can set Bitcoin aside if you want, because I think most people agree that's a different situation and how that's viewed and how it's established itself. But is there room for many competitors? Because this tribalism makes it seem like it is winner take all.
Great question. Fantastic question. My answer is I don't think it's winner take all, but I think it's winner takes most. I think, and it really comes down to liquidity. The reason for that is really because, in order for one, the way I look at things is I think most of the activity that's going to happen on these blockchains is trading. And what it's really going to come down to is, can we get the users the best prices that, that rival centralized exchanges? And the reason I think it's going to be winner take most is it's really because of liquidity, right? It's just that, without liquidity, you can't go and offer the, we can't go and get users the best prices, right? Do I think there's room for 2 to 3? Maybe, but, I think that, one of them is going to attract the most liquidity, and that's where most of the trading is going to happen. And, I think really what's going to set the winner apart is who can process the most, transactions, right? Who can process the most volume. And I saw this firsthand when I was at Kraken. It really comes down to just nitty gritty technical details, in terms of, liquidity, but also, can we support the volume? And, I think Ethereum, has some issues that I would personally say, just namely due to the layer 2 landscape, in terms of that liquidity can be fragmented. Whereas with Solana, it's just kind of this one nice monolith where everything, I know I'm using some fancy words here, but everything can just, work together. Our view is that, we think Solana is going to win, and we think it's going to be a winner most take world.
You mentioned maybe some of the potential shortcomings of Ethereum, and I always like to take a full 360-degree view of whatever I'm discussing.
Yeah.
And so one of the criticisms that I have heard of Solana, and maybe this is coming from primarily Ethereum supporters, but it's that Solana isn't really decentralized, right? It's controlled by VCs. It's had multiple periods of downtime, those sorts of things. I'm sure all the talking points that you've heard on the negative side. What would be your response to that, Max?
Great question. Fantastic question. And I think I have some spicy takes to these. I think that, in terms of, I'll cover decentralization first, so then I'll cover the downtime one. I think on the decentralization front, technology in general is all about trade-offs, and it goes further than technology. It's really just life. Everyone has different things that they want to optimize for, right? And with Solana, let's just take a step backwards and let's just look at it from a 40,000 foot view. The problem we are trying to solve is Solana's narrative is decentralized NASDAQ. Okay. we want to, like Solana as a network, we want to be able to offer trading 24/7, across the world. And if some news event happens in Singapore, you don't want the user in Singapore to have to go and, have like a ton of latency to get to the New York Stock Exchange where they're at a disadvantage, right? So that's the problem we're trying to solve. There are trade-offs that need to be made, but I want to also rebuttal that as well. One of them is that Solana is less decentralized than Ethereum. And if you look at it in terms of number of validators, which is a very apples to oranges comparison, because validators on Ethereum are a very different thing than validators on Solana, that is true. However, Solana has over 1,000 validators, right? And I just want to take a step back to think about, just like everyone to think about this. I think that, do I think investors are going to look at a network and say, okay, this network has 1,000 validators, this network has 10,000 validators, therefore this network is more valuable? I don't really think so. I think maybe there is, some argument for that. Like what that multiple is, I really think it's very small, because the chances of 1,000 validators colluding with each other are 500. Very, very small. These are all unique entities, right? So that's the decentralization point, is that Solana has over 1,000 validators. It's 1,000 different boxes running a network around the world. On the downtime front, I think this is one of the most misunderstood metrics. I think that downtime, I think, is really viewed by people that aren't technical as how often the network is down, but that is not the right way to look at it. The right way to look at it is how many times a user has been pushed away from making a transaction that they wanted to make that they did not. And if you look at Ethereum, there, over time, although I do admit Ethereum has gotten better, there's been many users that have been pushed away by how many by the amount of the how high the fees are on Ethereum, right? And that definitionally is users that wanted to use Ethereum that didn't because fees were too high. Also, what I'd like to point out is that Solana is on average doing 3,000 transactions a second, where even the Ethereum L2s are doing 300, 100 to 300 transactions per second. Even with Solana's downtime, it's still processing far more transactions than Ethereum is, right? So I think on the downtime specifically, I think that's a very misunderstood metric. Last thing I'll add is just that Solana is one of the networks that pushes out changes the fastest, and sometimes you got to move fast and break things. And I think that's Solana's biggest advantage and disadvantage, right? Is that we are willing to be risky and push risky changes into production. Also, not to be forgotten is that the New York Stock Exchange and Nasdaq have downtime on the weekends, right? And there's no trading after 4:30. So that's my answer to that.
Leah, anything that you would like to add to that, whether it be on the competitive landscape with other chains or just Solana's value proposition itself?
No, I think Max covered it really well. I think maybe just the last thing that I'll point to, which is different, which is part of your original question, is just the downtime. I mean, Max, maybe toss it back to you really quickly, but I think that when people hear downtime, it sounds particularly scary. And it really wasn't on the super scary side of the spectrum at all. And also something important that, helps us sleep at night with a validator is validators in Solana are non-custodial. So it's always your coins. And that's very different in other ecosystems where you have slashing, where everything is different. You could lose your tokens. So it's just a different ecosystem. But Max, maybe dispel the fact that it's not scary when people have talked about Solana's downtime before.
Yeah. Well, also, I tried to cut myself short there because I didn't want to ramble too long. But I also want to point out that Solana hasn't had any downtime in over a year, right? That's, I think, the most important thing to note. In terms of staking, your money is never at risk when the network goes down, right? It's just that if when the network is down, there are like transactions that can't get through, right? Just similarly to if it's a Saturday on the New York stock, it's Saturday, you're trying to trade a stock, you can't really trade it, right? But your money is never at risk when the network is down, right? It just means that like your money's in your wallet, never actually goes anywhere. But to be completely fair and objective, there is a period of time where if it does happen, which I have to reiterate again, has not happened in over 1 year. And I think even last year, there's only 2 periods of event. There's only two instances of downtime. That in those events, you can't send a transaction. But I think if you're looking at truly objective measures in terms of how many transactions get pushed on chain, I think you could actually very well argue that Ethereum has had more downtime in terms of if you're looking at it in terms of the actual metric that matters, which is how often are users transacting. There's been many users that have been pushed away from Ethereum, really due to fees.
As we look forward, in just a few minutes left here, and both of you can respond to this. Max, I'll send this your way first. A recurring theme throughout this podcast has been securities tokenization. And I know we all believe that, ultimately mainstream finance will be built on blockchain rails. I think that seems like a given. How long it takes, we can debate. Just talk about how you view Solana's role in this. What does that look like moving forward?
Fundamental. I think that's where I go. It's fundamental, right? And really, if you look at crypto trading today, it happens mostly on centralized exchanges, although DEX volume is going up, but equities volume it far exceeds, crypto volume. What I mean by crypto is, spot crypto, buying Bitcoin, buying Sol, buying ETH. In order to really support the types of volumes that equities, does today, you need a network that can handle the transactions, right? And I think it's no surprise that most of these tokenized stock projects have picked Solana first. And really just to like go one level lower on this one, the day there was Trump launched a meme coin, everyone can have their opinions on meme coins. I'm not here to get into that, but on that day, the Solana DEXs did double the volume of both Kraken and Coinbase combined, right? That is double the volume of the 2 biggest US exchanges out there. And if I'm an asset issuer, I'm one of these people that you guys have been nerding out on that I've been learning a lot from. So thank you for that. I've been really enjoying those conversations. But you got to look at which network can support the most volume. And it's objective that it is Solana today, right? So I think that the fastest blockchain is going to win. Solana is laser focused on being competitive, pushing the technology forward, and it's going to be that's what's gonna make Solana win, right? The fact that it can push out upgrades faster, the fact that we are just laser focused on building the best possible product, that is going to be what brings these tokenized stocks on chain. Also would like to point out just like one thing is that, we also announced our intention that we want to be the first issuer to natively issue our stock on chain, not a wrapper, not a derivative. This would be an actual share held on chain. We're looking to push that forward, right? So, we're doing work on that, in partnership with Superstate, who are just fantastic partners. It's also no surprise that X Stocks, which is another one that does like the wrapper model, which I think is great as well. They chose Solana first for a reason, right? So that's what I would say.
Leah, you get the final word here on Solana and the future of securities tokenization. What say you?
No, I agree with Max. This is where things get really interesting. And we see true, again, common stock, public company tokenization as really, I'm going to make fun of TradFi, but the most disruptive event since NASDAQ in the 70s or electronic trading. So you mentioned, large issuers on the fund side, right? We've already seen Franklin Templeton and other TradFi giants launching tokenized funds directly on Solana. You have Benji, and then BlackRock talking about another BUIDL fund on Solana rails. Apollo launched a fund on Solana rails. And to Max's point, I mean, the great thing is that the infrastructure is already ready today to handle that mainstream financial application that would prove out complete disruption. I mean, to your point, what we're looking at is complete global access, 24/7 trading, complete access for also, those that can't get US brokerage accounts, right? And decentralized applications. So even staking with your common shares, but these are common shares with the same voting rights, right? So it's just, a brave new world that should exist. And so, when traditional finance fully migrates to, blockchain rails, and we believe Solana rails, you're also going to see that efficiency and cost savings. And that's really where Solana comes into play, because we see that as really being the ultimate blockchain right now that can handle it in an efficient and cost-effective manner. And to Max's previous point, with a community that's not going away, because tokens thrive, survive, or die based on communities, whether it's developers or Nate, you and me talking ETFs on it. And if there's no more interest, there's no more participation and the price depreciates. So, that's where we see the future of Solana, and very much are excited about this future.
Well, a perfect ending spot for our conversation. Leah, Max, this was a lot of fun. Really appreciate you both taking the time. Thank you for joining me.
Thank you so much for having us, Nate.
Thanks for having us.
That was Leah Wald and Max Kaplan of Sol Strategies. Hope you enjoyed this episode of Crypto Prime. I want to thank our sponsor, Tuttle Capital. If you would like to learn more about Tuttle Capital's ETF lineup, you can visit tuttlecap.com. For exclusive daily market insights and the playbook that Wall Street doesn't want you to see, subscribe to Tuttle's free newsletter at theheatformula.beehive.com/subscribe. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.